Can you please confirm if my screen is visible and my audio is clear?
Yes, everything is clear.
Alright, so Patience asked us to go through this question that was in their first mock, in mock 1. I'm just going to show you the key points, and then the drafting, you do it in your free time. So what is important is to understand what the question really wanted. These are 7 marks. So if you get 7 by 1.8, we should take only 13 minutes on the question. But I will tell you, in the exam, you are not going to be multiplying by these single individual questions or marks. You will say if you're starting with section A, those are 50 marks. Then you go to question 1. Question 1 is 30 marks. So if you start on question 1, you get 30 marks times 1.8. So you time yourself with 54 minutes. You don't have to, remember question 1 will have sub questions, maybe from A to C. So you will not be multiplying the 1.8 by each of the marks. You get the total marks for the question. So now you know that if I'm working out part A, I should move very fast, go to part B. I also go to part C, so that by the time the 54 minutes are done, you are done with that question. Similarly, if you go to question 2, you get the 20 marks multiplied by 1.8. You are not going to be multiplying with the individual subsections. Okay, so the question is, discuss with reference to IFRS accounting standards on how JOSA should treat the borrowing costs. The borrowing cost, that is important, in its financial statements for the year ending 31st May 2x219. Okay, so once you see borrowing costs, you just know now in your answer you should have as per IAS 23. Okay, JOSACO, a listed company, is a sports organization. Is a sports organization which owns several football and basketball teams. The company's current financial year ended is, so the current year end, that is important. They have a reason why they are giving it to you. And then in the exam, this information might be on the first page. I'll show you how a standard paper looks like. It might be on the first page. So you must read very well so that you know the year end of the company. Okay. Remember, they are talking about borrowing costs. That should keep in your mind. JOSACO needs a stadium to host sporting events, which will be included as part of JOSA's property, plant and equipment. No issue there. JOSACO therefore commenced construction on a new stadium on 1st February. This is very important because you must know when to start capitalizing the borrowing costs. So the date when the construction began is very important. So 1st February, date commenced. Year end, 31st May. That shows you how many months you should capitalize. This continued until its completion, which was after the current financial year. See? This is also important. But they said you should account for the year ending 31st May. So you don't have to account. In fact, they said, okay, the year end is 31st May 2019. So they said it continued until its completion, which was after the current financial year. It is true that the completion of the stadium was after the current year, but they are interested in only the borrowing costs to be capitalized up to the current year. So you only have to run from 1st February 2019 to 31st May 2019. And I'm sure those are 4 months. So that is important. Months. to capitalize the costs for months. You should prorate 4 months. Okay. The direct costs were 20 million in February 2019. This is where the trick was, but even if you had not gotten the trick, you would have got the marks. And then 50 million in each month until the year ended. Okay. So they are telling us in February it was 20 million and then 50 million in each month until the year ended. We've said these are only 4 months. So in Feb, this guy spent 20 million direct costs. Then in March, they spent 50 extra. So in March, they had spent 20 plus the 50 to give you 70 million. Then in April, they had spent the 20 plus the 50 plus the 50 to give us the 120 millions. Then this is March, April. In May, the last month, they had spent 20 plus 50 plus 50 to get us 170 millions. That was the trick, okay, that there was. So in March 20, in 2070, 120 and 170. Okay. Josako has not taken out any specific borrowings. Now here they're even telling you they are not using specific borrowings, meaning that we are going to deal with general borrowing costs. Okay. So we are dealing with general borrowing costs. This was just to show you to finance the construction of the stadium. So this is just showing you that we are dealing with general borrowing costs, but it has incurred finance costs on its general borrowings during the period, which could have been avoided. So meaning that if, of course, they had general borrowings in their bank, but they incurred more costs because they had to construct the stadium. Josako has calculated that the weighted average cost of borrowings for the period 1st February to 31st May 2x9 on an annualized basis amounted to 12%. So this is a question that in the exam, that you're going to find in the exam. Maybe you do not have a hint on it. You do not have to lose your focus. For you just follow our state, apply, conclude. At least you get the marks for state. Since it is IAS 23, you must first of all talk about what the standard says in regards to what costs to capitalize. In accordance with IAS 23, okay, capitalization of borrowing costs should be made for qualifying assets. Then we say qualifying assets are that take substantial period of time to complete. We all know this. Then you say when it comes to general borrowing costs, okay, this should be applied on the total expenditure incurred on the asset. You just write something from within here. And also, if possible, you show us. Remember, since they are using general borrowing costs, we must get what we call the weighted average carrying amount. Okay? Since they are using general. Since they are using general borrowing then a student has to calculate the weighted average carrying amount of the asset, okay, during the financial year, And how are we going to get the weighted average? When it comes to weighted average, we just add the total, this amount here that was incurred every month, then divide by the number of years. Okay, as such, remember I'm just showing you the approach. This is not what you're going to write in your exam, in your answer. I just want to show you where you missed out. Remember, patient said you all missed out on the conclusion. It's because the calculation was not right. But remember, we always apply what we call own figure rule when marking the papers. So even someone who used wrong figures, even someone who said, who put here, and I know most of the students did this, someone who put here 50, then another one put here 50, another one put here 50, because that's what the question said. So now the total is what? Total is 20 and 50. Okay, you just add this 20 and 50, 70 and 50, 120, but also you end up with 170. Okay, so someone who used 170 as the total summation of these two would also get the answer correct, provided they applied very well. So as such, the carrying amount of the stadium is USD. Since we are obtaining the weighted average, we get our 20 plus our 70 plus our 120 plus our 170. Then we divide by 4.
Excuse me.
You're excused.
Sorry for taking you back behind, but I'm not understanding why we keep on April we add 20, 50 and 50 again. Then for May we add 20, 50 and 50 again. I thought the question said they incurred 50 million each month with the initial cost of 20. I thought the initial cost only come in February.
The initial cost only come
in February.
That is true. But remember, the total amount now incurred as at March is going to be 70. Is that true?
Yes, it is.
And it's going to be 120 in April. Is that true?
Yes.
So we are dealing with cumulative weighted average. That's why I told you that this question is a one-off. It is a one-off. But even if you don't get this concept of cumulatively getting these values, and you use, that's why I said, someone who used the normal approach of here 20, okay? Someone who did this, so the cumulative figure is 170, and then you get your 170 divided by 4, and you get 42.5. So long as you apply that 42.5 in your answer very well, following the state apply and conclude, you'd get the marks. These are 7 marks, you'd get 5 marks. So the trick is, why I gave you this question in the mock, you don't have to give up because you're not getting the concept. You apply the knowledge you know on the standard. This is a SBR, it is a professional paper that marks application and not correct answers. we use what we call on figure rule. On figure rule. Is that okay?
Yes, it is. Thanks a lot.
So now the only trick was here to get 95 million. For you to get all the marks. Yes, Patience.
Okay. My issue is with that last part you have done. I thought that we take the 170. Why we? Isn't it like you're re-adding the numbers? Because you got 20, 70, 120 plus the 170.
Yes, it is true. But as I told you, the question was not a normal question, right? But even someone who used this, someone who got this by 4, to give you what? To give you 170 by 4, to give you 42.5 million. You expect to have this, right? This is what you expected to have.
Yes. Yes.
But this was the idea behind the question. Cumulatively. So these are one-offs. We shouldn't even waste our time with them. They are one-offs, but what is important is for you to state you apply, then you conclude. So assuming that you stated very well about the standard, you have all the full marks here. Okay? Then you got here a wrong calculation. Someone has a question. Yes, Michael. Michael?
Mr. Evan, how are you? I'm okay. Now, in the month of May, how did you add it up to 170?
You joined in late, I'm sure. This 170 here.
Yeah, how did you add it up?
In February, the question, you didn't go through the question, unfortunately. So they spent 20 million in February. Okay?
Yes.
They spent 50 million in each month until year end. So in Feb, 20 millions. In March, they spent 50 millions. But cumulatively becomes 70 what? Millions. Do you get it?
Yes.
Then in April, in addition to what they spent in March, you add on the 50, you get 120. But they talked about this statement here. This one. This meant that these guys were dealing with general borrowing costs, where you must use what we call weighted average carrying amount of the asset. So this meant general borrowings were used. Okay, guys, I know this is going to be controversial, but you want me to draft for you the answer for this? Do you need it?
Maybe like you send the draft after. Like, I don't know. Okay, I feel like you should send the answer to group after.
I'm going to sit and draft the answer for you guys. Then I'll share it in the group.
And also, I feel like Michael was asking. Okay, you see where May is?
Where?
May, where you put the 170 million.
Here.
Yes, you added 250s instead of 3. So that's why it's not totaling to the 170.
That's what he meant. Sorry. This is cumulative from here to here. Michael, was that the question?
Yeah, actually.
Sorry, I just missed what was 50.
Okay, it was, thank you.
And now you got it. Okay, so let us hit. Please, this is important. Don't mind about this. You'll find these final questions. What is important for you to stick to this? And regarding, basing on how you've interpreted it, someone who used this would only fail to get marks here. And then, since we do not penalize 2 times, we shall apply own figure rule, and here you get full marks. So you wouldn't lost so much, so long as you're good at your application. So today we are going to deal with IFRS 15. Who can tell us what is it about?
It's all about revenues.
Sorry, I meant IFRS 5. I meant IFRS 5. Because that is what is on our schedule. What is that one about?
Non-current assets held for sale and discontinued operations.
Non-current assets held for sale and discontinued operations. Okay, since this is revision, I'll so much pay attention to practice, to question practice. So I'll ask you for what we should know, or I'm going to give you what is the basics that you should know. Then it is you guys to tell me what the basics are about. So basics to know well. 1, you must know, of course, classification of assets. Okay, classification of assets as held for sale, stroke discontinued operation. What is that something should qualify to be classified as held for sale? That is the classification. That's where we talk about if we are going to recover the carrying amount of that asset solely by selling it. That's what I meant by classification of assets. And then the highly probable criteria, very important, highly probable criteria, very important. Then the 12 months condition, 12 months limit. Then we should also know the measurement. So these are the basics that must be known in regards to this standard. Trust me, this standard will not come as a standalone standard. It will come when embedded in other standards. And where we have this IFRS 5, in most cases IS 36 does not miss. So you should be very keen when attempting the questions. So what I meant by classification of assets as held for sale or discontinued operations, IFRS 5 tells us that we can only classify any non-current asset as held for sale if and only if its carrying amount is to be recovered through sale of that asset. And so we are not going to continue to use that asset. Okay? Carrying amount is to be recovered through sale of that non-current asset rather than its continued use. So if you've made up your mind that you're going to sell that asset and you want to continue using it, then you can classify it as held for sale and discontinued operation. Now, when it comes to the highly probable criteria, who can remind us? What are those conditions? If there are 5 in number. Yes?
Hello? Yes, hello? Ivan? Yes. One of them is there should be commitment of sale of asset.
Perfect. Management should be committed to sell. So there is no any option of saying we are backing out. Okay? So if management has decided we are going to sell this asset, there has to be a plan and management is committed to that plan. Okay? Which other condition does the standard give?
The asset, must be for its immediate sale in its present condition.
Must be in its present.
Must be for immediate sale in its present condition.
Okay, you're saying, I can add it here, you're saying that the asset must be available for sale in its present condition. So you are not willing to add just. Okay, this is also a condition. Okay, but now if this is met, the standard says there are these other probable criteria that must be met. Is that clear to everyone? Is that clear to everyone?
Yes.
Okay. So what other condition under probable criteria are we given?
The sale should be expected to happen within a period of 12 months prior to classification of the asset as held for sale.
Perfect. This one here. The asset, okay, we are saying the asset should be sold within 12 months. Okay, within 12 months after being classified as held for sale. And these are the things we're going to write in the exam. 1, this definition, very important. 2, this statement from Michael, very important. And then the probable criteria that must be met. Okay, what is the other condition to the team?
The active program to locate the buyer might have been initiated.
Yes, a program to locate the buyer, meaning that the asset must be actively the asset. Okay, the asset must be actively marketed to locate the buyer. Perfect. So there is management commitment to sell. The sale is within 12 months. Asset is actively marketed to locate the buyer. So we have so far 3. Then the other one. We talk about the management looking for a buyer. Are we getting it? In fact, this one should be the asset must be actively marketed to locate for a buyer, and then the asset must be put on offer at a reasonable fair value. Okay, so if you are okay, you can say at a reasonable price, in relation to the, I know people are going to say, but that does not say that. In the exam, no one is going to follow the statements of the standard to dot. It is application. So for me, I remember there should be active marketing. And I also remember the price should be in relation to the fair value. That is important. You don't have to write exactly what is in the book. And then finally, the standard says there should not be possibilities of changing the plan. Because since your management is committed, then there should be no possibility of changing or withdrawing from the commitment to sell. Once you are committed, you should sell. Is this clear to everyone? Read these conditions, understand them in your own way, so that in the exam you can write them. Don't cram. Otherwise, you are going to have a lot of things to cram. No need of mugging, but just understanding. As we defined, assets that should be held for sale, carrying amount, recovered through sale. Asset available for sale in its present condition. And then the criteria: committed to sell, sold within 12 months, actively marketed, offer at reasonable price, no possibility of changing or withdrawing from the commitment to sell. As simple as that. Any question regarding what we've discussed so far, or I proceed? Yes, Patience.
So I have one question for clarification. Yeah? So in the exam, let me say the scenario talks about just maybe commitment to sell. That means I'm not supposed to put in all this information of 12 months, or let me say actively marketed, like everything, all the conditions. I have to just maybe talk about maybe management being committed to sell.
Now you see,
Yes.
when it comes to Ifrs 5, okay?
Mm.
Are you seeing this statement here?
Mm.
Okay? And then these conditions, they must all be met. Are you getting it? They must all be met. But as you said, and as we're going to see in our example, okay? If they have talked about commitment to sell, okay, asset must be, by the way, there's something here. The asset should be sold within 12 months, okay? However, the standard says if the conditions that extend the sale beyond 12 months is not within management control, but the sale is still probable, then you can still hold that asset as held for sale. Did I make sense?
Pardon on that.
Yes? Okay. The standard says if the conditions that forces the sale to be beyond, okay, the sale to be beyond, okay, if the conditions that forces the sale to be beyond the 12 months limit, and these conditions are out of control of management, okay, and these conditions are out of control of management, but it is probable that the sale shall happen, then the asset should be accounted for as held for sale. In fact, this condition here is what I was going to discuss for you down here under the 12 months limit. Yes, the study says the asset should be sold within 12 months. But if there are conditions that are above management control and the sale goes beyond 12 months after when it was classified that is held for sale, then management can continue to hold that asset as held for sale, provided it is probable that the sale shall happen. Is that clear now? Tim, is that clear?
Yes, it is.
Okay. So, patience, let us go through a question, okay? So that we can see how and when we can write, how and what we can write when it comes to IFRS 5. But in most cases, the question will come when it talks about all the conditions, because most of the conditions have to be fulfilled before a sale occurs. And in the question, where they don't want you to write everything under this probable criteria, they will show that the asset can't be held for sale. Let me give an example. Entity AB, okay, recorded its maybe building as held for sale. However, during the board meeting, it was resolved that this asset should not be sold. What does that mean? They're showing you that these guys, there's no commitment to do what? To sell. And so, in your answer, there's no need of talking about 12 months. No need of talking about active what? Actively marketed. You just talk about management commitment, and then you pick out what they said in the scenario. That during the board resolution, management was not committed to sell. Therefore, it shouldn't be treated as held for sale. Does it make sense, Patience?
Yes, it does.
Depending on the information given in the scenario, it gives you what you must write under our state part. Okay, so I've discussed the... Okay, so we have discussed this 12 months limit. It is not cast on the stone. Please take note. You just have to assess if the conditions changing the sale within 12 months are beyond management control, and it is probable that the sale will happen. And how do you know that it is probable that the sale will happen? Management remains committed to selling. And even if the buyer is still there. Measurement. There's something that I always tell my students, but who can remind us, how are assets classified as held for sale treated? Anyone?
Like in terms of measurement?
Yes.
Whatever, we consider that their fair value at the point of when we make them available for sale, then we do not depreciate them anymore.
It is good, but do you know that this measurement is the same as inventory? How is inventory measured subsequently?
At the law of cost and neutralizable value.
As simple as that. Are we getting it? Upon classification of the asset as held for sale, please take on the measurement of IS2 at the lower of carrying amount and its net realizable value. By this time round, the net realizable value should be the fair value less cost to sell, because we are not going to continue using this this asset. So as soon as the asset is classified as held for sale, then measure it at the lower of carrying amount and fair value less cost to sell, which is basically IAS 2. So if, let me say, on 31st December you hold it as held for sale, remember previously November to December 31st it was as per the applicable standard. If it is investment property, IS 40, PPE, IS 16. When it moves now to held for sale, you move it to the lower of carrying amount and fair value less to sell. My question is, where do we take, assuming that we are experiencing a loss, okay, probably the fair value is lower than the carrying amount, where do we take that loss?
The profit or loss.
Perfect. Any loss incurred when taking the asset to fair value less cost, fair value less cost to sell, is charged to the profit or loss. At what point can we take to OCI?
If there was a revaluation previously
Perfect.
on that asset.
Perfect. Unless there is a reversal of a previously recognized revaluation surplus. And we discussed this to detail, I'm very sure. We discussed that to detail, I am very sure. Then someone said, we do not depreciate the asset. Once classified as held for sale, no further depreciation should be charged. Remember, do we charge depreciation on inventory? Guys, do we charge depreciation on inventory?
No.
Perfect. So this is the measurement, but one thing is remaining. There is that one, this one, 2, this one, 3. And the standard says present it as a separate line item. Present it as the asset as a separate line item, bracket, we can say as a separate asset, non-current asset, line item in the statement of financial position. In the statement of financial position. So these are the basics. You're going to find that maybe in your question 1, group accounts, these guys classify the asset as held for sale, all the criteria met, but they go ahead and present it under current assets. Now for you, what they want you to do is to remember only this statement, and you talk about, as per IS 5, any asset classified as held for sale should be presented as a separate line item in the statement of financial position. That's what they need. And then you do the adjustments. Of course, we shall see how we make the movements so that you can correct the wrong financials. Is this enough to recall the basics? Can we have an example? I'm waiting to hear from you.
Yes, Ivan.
Yes, please.
Just pardon me on this underlying statement, because I see you saying present the assets as a separate non-current asset line in the statement of financial position. I thought it would be presented within the current assets as a separate line and not non-current.
You thought it's going to be? Oh, sorry.
I thought
It should be presented. Present the asset as a separate. You see this one
current
here?
asset.
Okay. Maybe putting this statement makes it weird. Eh? What I meant was, we must, you see, if it is a subsidiary. Okay, let us assume that you have a vehicle. Okay? You are committed to selling it. Okay? If you have 5 vehicles, one vehicle is classified as held for sale, the 4 are not. Okay? You are going to have working notes to show the value of those, to show the carrying amount of those assets that are not for sale. You present it as NCA, not so PPE. Then this separate one, you show it as asset held for sale under the non-current asset line. You get it? Eh?
Yes.
I wish I had here a financial statement where we present it. It is always presented as independent. If it is, let me say, if it is a business, let me say in a different location that you're going to sell, for you to show it, you show it as operations, discontinued operations. Then you show the results. But you cannot club it in the notes of all the other items that are still held for the daily operations of the business. Probably if I remove that statement, non-current can make it better. Present the asset as a separate line item in the statement of financial position. Is this okay now?
Yes, it is.
It is, you get it?
Yes.
Alright, so let us have an example. Okay, here we have. Discuss how RODICO should be accounted for in the consolidated financial statements at 31st December to X4. These are 4 marks. So they want us to discuss the accounting treatment of JODICO. They are saying that on 1st January to X4, JOSACO purchased 100% equity interest. Those who have already covered the group accounts, and I'm sure for those who did financial reporting and also financial accounting, basic group accounts is assumed knowledge. So these guys purchased 100%, meaning that since they purchased 100%, someone is going to rush and talk about a subsidiary with 0 NCI, non-controlling interest. But you have to continue reading. So 1st January, these guys purchased 100% equity interest in Jolico. So this qualifies to be a subsidiary with no NCI. Josako made the acquisition with the intention to sell. Perfect. You saw they are telling us intention to sell, and therefore did not wish to have an active involvement in the business of Jolico. No active involvement in the business of Jolico, meaning that already this statement here, you can't miss it out. This, okay, these guys are committed to sell, because when the intention at the start, it was to sell. Okay, Josako immediately began to seek. Now, Patience, are you seeing how the examiner is leading you? Patience?
Yes, yes.
So you must write about this also. You must write about this. Okay. And felt that the sale would be completed by 31st, you see? And felt that the sale would be completed by 31st October 2x4 latest. Then you count 1st January to October, same year. Those are 10 months. Then you must write about this. Where is it? You must write about that. Well, the examiner is already leading you. Okay. Then a buyer for Jolico was located in August 2x4, but due to an unforeseen legal dispute over a contingent liability disclosed in Jolico's financial statements, the sale had not been finalized as at 31st December 2x4. Now this is the 12-month limit. Okay, these guys found a buyer, but there was unforeseen. You see how they are trying to run away? Unforeseen legal. Meaning that this condition is out of control of management. They never expected it. That, you know what? There is a contingent liability these guys are hiding in their financials. So the sale had not yet been finalized as at 31st December 2x4. So even after the 12 months, the sale is not yet complete. But remember, the sale is expected to be completed in early 2x5. So they are telling you that, you know what? It is probable that the sale is going to take place. Are you getting me? So even if this is against the standard, it is probable that they will sell. Then you start writing your answer. Any question regarding the interpretation of the question?
None from me.
Since none for you, can you all type your answers in the chat box?
Okay.
State, apply, conclude. But don't write these things for me in your attempt. Just write. But in your mind, when you're guided by that. These are 4 minutes, so I'm giving you 4 by 1.8. I'm giving you 7 minutes. So by 8:49, you should all be submitting. Are we aware? So this is good. I'll just be using G for that. For info, that is okay. Just talk about the asset with the intentional. This is also good. Good point. Furthermore, the management is search for the proofs that the sub is actually material, though the sale is not made. That is out of control. This is good. Meanwhile, they will not mark the English. Okay? They can understand what you meant here. So you would get the what? The mark. Therefore, the patient will be recognized as an asset held for sale on the statement of. This is also good. The conclusion is perfect. But you try to break your answers, right? You try to write short what? Answers. This can be like this in your work, so that the paragraphs are clear and the examiner can get where to put the mark. Don't write continuously. As per Ifrs 15, an asset should be classified as asset for safety. Committed. Okay. Don't use bullets. Joseph, don't use bullets. Don't use bullets.
Okay, please.
In your presentation. But I've seen no one is using short headings. I'll comment about that later on. Okay. This is good that you mentioned. There should be. So this is good. Writing all that information was okay. But of course that is 1 mark. However, an asset could be classified, if not within, beyond the perfect. This is also good. As per the case, equity investment, okay. Meet all the, okay. This is because Now for you concluded before you applied. This is conclusion also. This is conclusion. Despite the fact that the sale didn't happen within 12 months, we see that this was outside. Stop saying we see. Joseph.
Yes, please.
You are not discussing for someone, you're providing guidance, accounting, technical knowledge to the team, okay?
Yes.
Yes. So you don't say we see, no. Despite the fact that the sale didn't happen within 12 months, okay? Don't put this. Just say, comma, this was, or this is, okay? This was outside the corner of your circle due to unforeseeable. This is perfect. So don't say we see, don't involve yourself. You just have to give guidance. It would have been this. This was outside control of your circle due to. So now this one is also a good. Don't use I, don't use we in your answers. As soon as just accomplished the presentation to sell, as per the case, the quantity, this is good conclusion. This is also good what? Conclusion. Okay, so we are all doing well in accordance with held for certain contracts. It's considered to be held for certain the carrying amount. This is perfect. Joseph, there are things that are very important. Okay? There are things that are very important. You forgot this definition, but it's very important. The asset must be available for service. This is also okay. And trust me, in the exam, they'll bring when one of the statements is against this, so that you counteract it in your answers. The standard also says that the asset must be actively marketed. Perfect. This is good. However, the asset is not sold. Okay, based on the above, just acquired. To sell this, that's this investment they cover. Okay. This is a lot of writing. Patience, eh? This is a lot of writing, but it's okay. By that before the, however, due to something I think is mixed up, therefore solutions are made. Heard for sale. They don't mark English and spellings.
I think we're good. We're coming half when I copy pasted. That's why you're saying however, like I've sent them like later.
Okay, but at least I've seen you guys, the flow of content is good, but avoid using personal pronouns. We, I, us, them. No. You are giving technical advice to the team, so you must always use the company name in your scenario. And I can see you have applied, who is this one? Joseph. Joseph, I'm not seeing Josa. Joseph, are you seeing Josa?
Yes, that was state. Just as down here.
Down here. Try to make sure that you use the company name within your application. Yeah. This is the state,
Okay.
right? No, right. This is okay.
Yeah.
Yeah. This is your state.
Yeah.
It's fine. So it is here. It is under application. Perfect. Then patience also just is there. 100%. Jolico is there. So you guys are doing good. One thing you've all failed to use are the short headings. When you're presenting your answers, I told you, after reading, discuss how Jolico should be accounted for in the consolidated financial statements at 31st December 2024. So you can say accounting for Jolico as your short brief heading. Okay? Accounting for Jolico. You should always use brief, short headings. So even Raymond, you should always have this as your first presentation. Short, brief heading. Or you can say, Jolico as an asset held for sale. The other one can have, okay, treatment of Jolico in JOSA consolidated statements, and you should always underline it. So you can pick anything that for you pick from the what? From the standard. Then maybe I can say accounting for Jolico as asset held for sale. So in your mock tomorrow, make sure that you have those short subheadings. Is that clear to everyone? And I proceed. Is it okay with you guys? I proceed. Joseph?
Yes, Ivan.
Is my guidance clear?
Yes, it is clear.
Okay. So let us go through IFRS 2 first, so that we can call it a night. But let me ask you, have you all covered IFRS 2? Joseph, are you done with IFRS 2?
Not yet on my side.
Raymond, are you done?
Yes, I have.
Michael, have you covered IFRS 2?
Sorry.
Not yet.
Yeah.
Patience, we're just covering, right? Okay. So since only one person has covered the standard, I'm not discussing it. So what you're going to do, prepare for tomorrow's mock. I'm going to set for you the standards we've covered so far. Okay. Raymond, have you covered ethics?
I think I have, but I'm not completely totally. I'm on the ending part.
You are on the?
On the last part, yes, but I've sorted it. I've sorted the ethics.
Patience, have you covered ethics or not yet?
I've just passed through the notes.
Okay. So I'm going to only set for you a mock on the standards we've revised up to IFRS 5. So use this remaining few minutes. I know you guys are tired, you're from work. Use the remaining few minutes to go through a few things in the standard we've covered. Then make sure that you watch IFRS 2 so that on Tuesday we can cover IFRS 2 and finish it. Is that okay with everyone?
Yes.
Alright, I'm going to be sharing the mock this evening so that tomorrow you can sit and complete it. So that is it. I wish you a good night. Practice, watch IFRS 2 so that we can be able to cover it on Tuesday. Our standards of interest now are going to be IFRS 2, IFRS 9, ethics, group accounts. So make sure that you cover all these in the remaining time. I want us to be done with the revision by 15th of February. So it all depends on you and how much effort you put in to cover the standards in the videos that I sent you. Have a good evening. Unless you have a question, you can ask. But if you have no question, please have a good evening. I'm giving 5 minutes. I'm going to be here. Those with questions, you can ask me. Those without questions, you can leave.